Hey, folks, I want to talk to you a little bit about some rubber band trades that we did today. And this thing is a beast right now, but NGLS, this is what we call rubber band trade when the stock's just getting pummeled here. I very rarely like to go counter trend. I only go counter trend when I get an extreme situation that is a high probability snapback because it's just so extreme. It's like a stock like an NGLS, it's a big, gigantic turd. It really is. That's why it's down so much. But at some point, it gets so stretched, when you start to see these really, really big down days, like starting to cascade. And I want to see 3 or more down days, but I want to see at the end some really, really big down days with some heavy volume. That's when I start looking at this thing for potential long. And so the key is really to use your intraday chart to kind of time your entry. And so like yesterday, you can see here, like it just kind of cascaded down all day, and it tried to make a run, but it didn't really do anything. It was just stuck in a small range. Then today it opened up weak. See how it gapped down? But it gapped down right into support. So when it gaps down right into support and then it holds, that tells me right off the bat that, this is a stock that's a potential long. And so, we want to get long this stock. If it can hold these lows, now we've got ourselves what we'd call a double bottom, and you can see there's a lot of potential upside here. And so, we took a position in this, and then added a little bit in the 1450s also, and then essentially we're playing it for the breakout over here. And if you can get over that, then you could see here you test. The more times you test this thing, the wilder it's going to get, and then you're playing this big push over here. Now, for me, I'm out of town. I'm in Hawaii right now, and so I'm not trying to hold this thing for the whole run. My original target would be like this last gap. That'd be my gap. But, when you're on the road, you trade, you take your profits, and then you go off and do stuff. And that's kind of how I am when I'm going out here. And so it did get close to my original kind of where I was hoping to get into. And I was selling off into these kind of 1550s and stuff like that. But, overall, it was a pretty good trade. Made $1,400 on it. Didn't have too many shares, and so I think my original position was 2,000 shares, and I added 1,000. So that's pretty good. And same kind of deal with KMI. We did the same thing. This is how you get confirmation on a rubber band long. So rubber band longs and rubber band shorts. Rubber band shorts oftentimes, and there's a whole host of different intraday techniques and patterns that you can learn. I teach them all in my boot camp on how to get into a pattern that you see on the daily chart. A double bottom is one different technique or tactic that you could use intraday to get in. And that's what we saw today after this big gap down. It just ran into support. And so, everybody's thinking this stock is in the hole and it's going to go lower. But you got to remember on the daily chart how oversold it is and the climactic volume. And so once it holds support, you can go long. So I bought 5,000 shares right here and just stop right under that level. And then essentially, we're playing it for our first target's really this gap fill. And you know what? If it really is in a healthy market, today the market's down a lot. In a healthy market, we've got a little bit bigger push. But the market itself is down, I don't even know, 165 points. Across the board, it's just negative. And so you're not going to get that huge push. But you will get this type of quick counter trend trade. And, my thing is, I added some on these dips. As long as I'm getting higher lows, I like it. So you're getting higher lows, higher highs. And when that starts to reverse, then, you want to get out of this thing and take your profits. And as always, scale out into these type of spikes at, 3,000-4,000 shares. When you start spiking 20-30 cents, you've got to take some off the table. But that's what I call a rubber band short. So that's one of the setups that, I teach in our trading boot camp, which is a 60-day course designed to take people from A to Z on everything I know, not just about day trading, but also swing trading. We start all our classes on the big picture patterns like a rubber band short or a rubber band long, and then we start using different intraday techniques to really start timing our entries, and then we have certain intraday patterns that we just use. But that's one of the plays that we go over quite a bit in our boot camp class because it's hard to time these things. When I was younger as a trader, I just see something that fell down a lot and it got cheap, and I just want to buy it blindly, and I'd just be like, it's cheap, and then I'd buy it, but then it keep going down. And so, using some of these techniques will really be able to get you into the stocks, but help you manage your risk. And if it doesn't work, then you just get out, and that's okay, and you live to fight another day. And so, I'm done for the day. But if this thing started to base out and maybe it makes an end of day run or something, I'd probably get back in it. But I'm out to go hiking in about 15 minutes once I'm done with these videos. So, folks, let me know if you have any questions on the rubber band long. The only other trades I really took today, I took this Unified. I really blew it up. I messed up the trade in that I had a nice short in it. Yeah, I had a nice short in it, and I took a loss on it, but I freaked myself out. See, the stock gapped up, and then it was bear flagging here, and you know what? I had to stop at 38, and they're a little bit less than 38, but right around here, and I had about 37.55 entry, and it went up like 10 cents, and I just panicked and sold it for some reason. It's really important once you have your stop in to really just stick to it, unless the structure of the stock changes. Because, like, for me, I had a good trade. I mean, I could have made, I had the potential to make it maybe $1,000 on it, or $700, $800 once I'm done scaling out. So, to just when you're only risking 30 cents, there's no point of covering when a stock goes up 10 cents. I mean, that's the spread on this thing. See, the spread is 3-4 cents, and so I panicked. And I think it was partly because I was a little bit overloaded. I have this thing. I usually don't trade well when I have more than 3 day trades going at once. And so, I had a few trades going on, and I think I was having a little bit of trouble managing them. And I just kind of pulled the trigger a little bit earlier rather than waiting for it to actually do what it's supposed to do. So that's it for now, guys. Email me anytime you have any questions. Kunal, Kunal, at bullsonwallstreet.com. And I love talking to people. I love talking to my students and stuff like that. So feel free to leave any comments or questions you have. Take care.